Hello, I'm Lieutenant Colonel Tony Bancroft, United States Marine Corps Reserve, and Portfolio Manager of the Gabelli Commercial Aerospace and Defense ETF, ticker GCAD. Today, I'd like to provide 5 reasons this sector deserves attention. The aerospace and defense sector is at an inflection point. From surging global defense budgets to the rebound in commercial air travel, long-term tailwinds are creating compelling opportunities for investors. Number one, surging global defense spending. NATO recently increased its defense spending target to 5% of GDP. The U.S. defense budget request for fiscal year 2026 surpassed $1 trillion, the largest in history. Ukraine has significantly depleted Western missile and ammunition stockpiles, highlighting the need for replenishment and modernization. To takeaway, sustained and growing procurement budgets create durable demand for companies like Lockheed Martin, Northrop Grumman, and Tier 1 suppliers. Number two, commercial aviation recovering backlogs. Commercial air travel has returned to pre-pandemic levels, with international travel up 3.5% year over year. Boeing and Airbus project nearly 44,000 aircraft deliveries by 2044. Airlines are locking in orders now for delivery slots post-2030, fueling record backlogs. Boeing's alone exceeds $500 billion. Investor takeaway: OEMs and suppliers are positioned for multi-decade growth as airlines modernize fleets to meet rising middle-class demand, especially in Asia and India. Number three, technology and innovation driving the future. Next-gen defense tech, AI, drones, cyber, hypersonics, and precision weapons are being incorporated into modern aerospace technology. In commercial markets, lightweight composites like Hexcel's carbon fiber now comprise over 50% of wide-body aircraft structures. Autonomy and drones are reshaping ISR, that is, intelligence, surveillance, and reconnaissance, and strike capabilities. Investor takeaway: long cycle innovation creates structural growth, benefiting both primary and niche suppliers. Number four, high margin aftermarket growth. The aerospace aftermarket is expected to grow at a high single-digit annual rate as global air travel demand once again outpaces overall economic growth. Airlines are extending the service lives of existing fleets, which drives increased demand for maintenance, overhaul, and replacement parts. Specialized companies such as HEICO and GE benefit from FAA-approved parts and aftermarket services that generate recurring high-margin revenue. Investor takeaway: aftermarket revenue are reoccurring, high margin, and resilient through cycles. And number five, M&A and consolidation opportunities. Strategic acquirers and private equity firms are actively pursuing acquisitions of niche suppliers with proprietary technologies and strong aftermarket exposure. Recent transactions, such as L3Harris's purchase of Aerojet Rocketdyne and HEICO's acquisition of Wencor, illustrate this trend. Pace of deal making is expected to accelerate as valuations normalize and operators seek to secure scarce capabilities in areas like advanced materials and electronic systems. Industry consolidation is reshaping competitive dynamics, creating larger, more diversified platforms that can capture long cycle growth and drive shareholder value. Investor takeaway: the aerospace and defense is experiencing structural growth, consolidation, and innovation, positioning investors for long-term opportunities. How to invest in aerospace and defense. The aerospace and defense sector offers a rare blend of long cycle demand, structural growth themes, and defensive characteristics. For investors seeking exposure to this critical industry, the Gabelli Commercial Aerospace and Defense ETF, ticker GCAD, provides diversified access to leading companies positioned to benefit from these secular tailwinds.
Tony Bancroft is a portfolio manager for the Gabelli Commercial Aerospace and Defense Fund. This ETF is different from traditional ETFs. Unlike traditional ETFs, this ETF will not tell the public what assets they hold each day. This may create additional risks for your investment. For example, you may have to pay more money to trade the ETF's shares. This ETF will provide less information to traders, who tend to charge more for trades when they have less information. The price you pay to buy ETF shares on an exchange may not match the value of the ETF's portfolio. The same is true when you sell shares. These price differences may be greater for this ETF compared to other ETFs because it provides less information to traders. These additional risks may be even greater in bad or uncertain market conditions. The differences between this ETF and other ETFs may also have advantages. By keeping certain information about the ETF secret, this ETF may face less risk that other traders can predict or copy its investment strategy. This may improve the ETF's performance if other traders are able to copy or predict an ETF's investment strategy. However, this may hurt the ETF's performance. For additional information regarding the unique attributes and risks of this ETF, see the Non-Transparent Exchange Traded Fund ETF Structure Risk, Early Close Trading Halt Risk and Authorized Participant and AP Representative Concentration Risk in the Principal Risks section of the prospectus. Exchange Traded Funds ETFs are bought and sold through exchanges trading at market price, not NAV, and are not individually redeemed from the fund. Shares may trade at a premium or a discount to their NAV in the secondary market. There is no guarantee the investment strategy will be successful. Investing involves risk, including the possible loss of principal. Premiums or discounts are the differences expressed as a percentage between the NAV and market price of an ETF on a given day, generally at the time the NAV is calculated. A premium is the amount an ETF is trading above the reported NAV, expressed as a percentage of the NAV. A discount is the amount an ETF is trading below the reported NAV, expressed as a percentage of the NAV. The prospectus registration statement shows the frequency of distributions of premiums and discounts for these ETFs for the most recently completed fiscal calendar year and all completed quarters of the current fiscal year. Investors should carefully consider the investment objectives, risks, charges and expenses of the ETF before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com. Risks to the ETF include a downturn in commercial air travel, production and/or supply chain disruptions, decreases in defense spending, subcontractor financial health and competition and/or technology changes. As of June 20, 2025, GAMCO and its affiliates owned less than 1% of all companies mentioned. Distributed by G. Distributors, LLC, a registered broker-dealer and member of FINRA.